This is the MTPredictor weekly market update for October 26th. So in earnings season here, here's the S&P on the daily chart. Again, we put in our low here after obviously we had our sell signal back here. This was the initial target. You see that broke down. Here we had this red high volume spike indicating that professionals were stepping in here and buying. It was confirmed by the blue buyers candle here. Once they took the high of that blue buyers candle, we anticipated at least they would rise to 1900. You can see they've obviously gone through that. Your next major resistance level is going to be at 1980. Just check the pattern here because we're right in potential wave 2 or B. So if this area holds as resistance, right, we have a couple of gray candles here, no indications on Friday there that sellers were overcoming buyers. This is a neutral candle. So no weakness yet in the area. If this holds as resistance and we do get a red seller's candle to form and that gets broken to the downside, then maybe we start another leg, begin another leg down here. It's much less common to get a V bottom like this and just to go on to new highs. Typically you get, the initial bottom and then a retest. If this does hold as resistance, we should get that retest. If they take this out to the upside, right, then there's 1980 here all the way up into 2000 is that basically that resistance. Here again, if that holds, it's an area we anticipate we should get some type of correction, but we need to see again, red seller's candle in that area and that to get broken to the downside. If they just move through a level, like they're doing here. We had a red seller's candle here, but you see they never exceeded the low of that candle and they just continued higher. So if we see that in that area, the decision will be basically to go on to new highs if they take this area out. And that would be next would be a decision point off of the high there. 2040 would be the target above that. Alright, so we'll see what happens this week. If we look at the weekly chart here, you can see this pullback in terms of the weekly chart was a wave 4 pullback. Just put that on here. I've already projected up your wave 5 target here. That's the minimum wave 5 target. Alright, so there was our support from the daily chart, again on high volume, the rally, and we'll see if it continues to move through these levels, then this weekly will potentially play out to the target there. Alright, let's look at the dollar index because again that has been a big driver of what's happening in the markets. This is the weekly chart of the dollar index, and you see the dollar hit that monthly resistance level. That's a major resistance level. Remember, it wasn't able to take these prior swing highs out, and eventually just recently broke that. You see the STF was indicating there was more upside ahead. Now we've reached that level. If we go to the daily chart here, alright, we went 5 waves up there, alright, into the typical wave 5, into that monthly resistance. The tendency then is you get a correction back to the wave 4 DP. Alright, but we're going to see now if this level holds as resistance, right, and the dollar does sell off, back into this decision point, and maybe eventually breaks that and breaks down, then that would be again another game changer because that would help support oil. Your commodities, metals should get supported and rally off of as the dollar weakens. But if this pullback remains shallow, if it continues higher, if it takes this level out, that would be, I think, the beginnings of a deflationary scenario here in the U.S. as kind of the rest of the world begins to kind of deflate or stagnate. That would affect us here. The Fed I expect will fight that. They don't want a strong dollar. They don't want deflation. They will looking for more inflation. So as this, if this does break this level here, that would be a major change, because if we look at let's just look at the metals here. If the dollar does continue to strengthen and takes that level out, where's my, well, let's look at gold here. Daily chart. I think I've got some analysis on the well, what I was looking at here, I'll redo. I thought I had the analysis on here, but here's this little pattern that we had back here, and you had these succession of lows here. Right, that got broken. That little descending triangle got broken down, and now we've got another, this descending triangle forming with your bottoms here. Now you see this TS2 was a wave 4 heading into the wave 5. But you see gold has kind of rallied off of these little support levels here, and so we'll see if it continues to rally into that little descending trend line here, and then if the dollar is going to break that level, gain strength eventually, then we may see similar to what we saw back here. Once this level broke, right, we had that another leg down. If we look at silver, let me see if this will show up on the silver chart here. No, but again, silver, we had that 5-wave pattern up, correction back to the wave 4 DP, the 5 waves here from wave 4 to the wave 5 target. Here's this wave 3, here's the DP. This is where we are in the support area, but a similar pattern that we had here, where we had the descending triangle, and we looked at this before when this was all setting up here, and we talked about they break this level here, right, which they did. Now we've got again another level here with your supports here. Now silver's really already kind of broken down. Now it's in this support level here. If this level does give way, again, if the dollar does begin to rally again, takes out its resistance level, then the next stop would be down just around 14 to 15. That would be your typical wave 5 target to the downside. I didn't get that on quite right there, did I? No, not perfect, but there we go. Looks a little better. If this level gives way, then we'll see this level, and ultimately, like I said, if the dollar does break that monthly resistance level, let's take a decision point off of the bottom of wave 1, because that's the tendency. If they take this level out, the tendency is they're going to find the decision point off of wave 1, right, which would be this area here. Alright, so we'll keep an eye on that. And finally, let's just look at, I'll look at a couple more things. Let's look at oil. Alright, oil on the weekly chart here again. This TS4 did reach the target there, 83.89. Oil has come down to that $80 level. The next supports, here's the lowest of the lows over that few-year period here. We'll take a decision point off of that. So we'll call this right around this a $70 to $75 level, just below 75 would be the next major support. So I wouldn't consider necessarily this pattern broken unless this level gets taken out. But you can see as oil approaches that $80 level, the low here, 77.45. All right, so it can overshoot the $80 level. But that range at $80 to $110 level has been the range, and it's been consolidating in that large area for a long time, one of the longest consolidation periods in the history of oil. So if it breaks down, we do have some strength to the STF to the downside. So we should see it's oversold here. We should see some type of rally. All right. Again, a lot will depend on the dollar, what the dollar does. The dollar has been, it's off its highs, its recent highs. We'll see if we get some type of rally off of this level. If the STF stays strong, that rally would be, pretty muted and roll over, break that level, and we may test this level. If this level gives way, then we got a long way we could drop. All right, but look and see. We'll see if this acts as some support here. So far, they haven't taken the level out. We'll see what we'll get from here. And then finally, let's just look at the Euro US dollar here. And I did want to mention one other thing. Where's my Euro US dollar? Here it is. Now that's the weekly chart. Alright, so we did have this 5-wave pattern down in the euro. Now the euro's being devalued because they're trying to bring inflation. Remember we talked about the overseas things are deflating, so they're trying to devalue the euro, keep that in, get some inflation. Of course, the dollar is being affected by that. I think it's November 30th, the Swiss are actually going to vote whether or not they're going to hold 20% of their assets in gold. That's I think the equivalent of about 15 million ounces of gold. All right, that would take $15 million or 15 million ounces, I'm sorry, off of the market, potentially pushing gold higher. So again, that's something else. I don't expect that they're going to pass this, but if it does, right, it certainly could, certainly should have an impact on the metals, and also it may be something that affects other countries around, may start to look at this and consider that as well. So watch for that. November 30th, I think that is, the Swiss are going to vote if they're going to basically hold 20% of its assets in gold. But like I said, they're trying to devalue the euro, so we had this nice 5-wave pattern down here where we anticipate we should get a correction back to this 30.57 level here. All right, the question will be, are they going to allow, or their central bank, they're going to continue to keep pressure to the downside on this, as they don't want the strong euro at this point, trying to create some inflation. All right, so we'll wrap it up here. And then one last thing is of course, it is Fed week, so the meeting for the FOMC here in the U.S. will begin on Tuesday, with the announcement on interest rates will be on 2 o'clock Eastern time on Wednesday. So expect a full slate of economic data all week, which is good. Market should move well, but Wednesday ahead of the meeting, Wednesday after the first hour of trading, things tend to go quiet. So just be aware of that. And then once we get the announcement out of the way, we've got GDP and jobless claims on Thursday. So watch for that, and we'll take a look and see what damage the Fed has done when we come back next week.